First quarter earnings season will officially get underway today when Alcoa reports after the close. Jeff Davis is Chief Investment Officer at Lee Munder Capital, which has $5 billion under management. He joins us now from Boston to discuss where he is putting his money this earnings season. Jeff, welcome to Bloomberg News. Always good to have you on.
Thank you. Pleasure.
So, Jeff, where are you putting your money? What's the earnings outlook?
Well, the earnings outlook is it's going to be easy comps compared to a year ago on the earnings side. So it's so easy that it almost doesn't matter now. I think investors are going to look beyond the profits being reported and look at top-line growth, particularly in capital goods, manufacturing, and consumer. They're going to be looking at quality of earnings. They're looking for fundamental strength rather than the profits that are being reported.
Well,
and that.
I'm sorry, Jeff, are those PE multiples, at least the bottom part, still modest?
Yeah, the bottom parts are modest, and actually you're seeing now the forecast growth varies widely depending upon which part of the equity markets you're looking at. There's a real optimism baked into emerging markets, for example. We do a lot of work looking at bottom-up earnings forecasts, and they're very optimistic, and the multiples are very high. So we've taken money actually aggressively off the table there. But we've put it instead into small-cap growth in the U.S., which we think actually are still reasonable multiples.
Right.
And looking at interesting is technology and consumer cyclicals.
And before we get into some specifics, you mentioned emerging markets. Do you think they're still overpriced?
Yeah, I've been investing in emerging markets since the late 80s. They go through periods of optimism and, too many anecdotes and not enough understanding that it's actually, particularly if you buy the indexes, it's actually a commodity play. The valuations are very high and the optimism is too high. So you're getting better value for, let's say, growth in India and China and Brazil by buying some of the global exporters, right, like your very high-end European or American-based companies.
Right. So I guess I would imagine then that in your opinion that the large caps with some emerging market exposure might be a better way to go.
Yeah, and it's not a new theme, and a lot of you're hearing a lot of people say it, but it's very clear when you look at numbers. The valuations and the growth expectations are far more modest of the large. I'm going to throw out just names that are major components of the indexes, the Procter & Gamble's or the Unilevers, who do a tremendous amount of business in emerging markets. Those multiples are very reasonable compared to buying emerging markets companies themselves that are, less geared to compete.
Right. Jeff, you mentioned Procter & Gamble. Before we go any further, I wanted to ask you about healthcare reform and how that might have impacted the healthcare sector or pharma.
Yeah, it really has held back any kind of appreciation and value throughout healthcare, and whether it's devices or pharma or so forth. And it certainly turned out to be, the bill was much ado about nothing.
Yeah.
But the reality is it's left the multiples very attractive, and so healthcare is looking very interesting. Biotech's the first to run here. It's been running for the past month or so. So I think you probably got some good value there.
And Jeff, some of your top picks quickly?
Yeah, one to watch is Zions Bancorp. Now, even though we've just taken some profits off the table, still hold it in quantity. Zions is an interesting one because it represents, it's a bellwether of Western United States, not only a well-managed bank, but it's also a bellwether for the Sand Belt real estate, which is continuing to improve. The credit quality of this bank improves. It's probably one of the top performers, so it's been a bit too hot lately to be, so it's run up a bit, but a very good company and shows that the strength of the economy is very broad-based right now.
Jeff Davis, Chief Investment Officer at Lee Munder Capital, joining us from Boston. Jeff, it's always good to talk to you. Thank you.
Thank you.